Before the break, we were talking about alternative investments that are now going to be potentially available within your 401k options. So Chet, kind of recap us on the investment that Joel had made that you talked about on a previous show.
Yeah, so long story short, the current administration has signed an executive order. Basically what they're trying to do is bring alternative investments as available options in your employer retirement plan. So think private equity, cryptocurrency, that sort of thing. I think people have been asking for this for a long time. Those investments are seen as sort of the the investments for the wealthy, the powerful, what can beat the market, maybe what can just offer you outsized returns, and in some cases that can be true. Obviously everything is a risk reward argument. The potential for huge returns are there, but that isn't always the case, and a good way to highlight that is a story from Joel himself. So this was actually a few years ago when he did it, but we talked about it on the show a few months ago. Essentially what he did was he invested a sum of money into a private equity fund that invests in real estate. And the reason was because the advertisement said that the internal rate of return was well over 10% over a long-term basis. So that sounds really good. But we have to remember, IRR, that means internal rate of return. That is what the assets within the fund return on a pre-fee, pre-expense basis. And then at the end of the day, what really happened is when we calculated his personal return after all of those fees and expenses, that happened to be closer to about 5%. So that ends up being the issue, is that with these private funds, the expenses are a lot higher because there's a lot more active trading. You have to pay managers a little bit more because they're a little bit more hands-on. So yeah, I mean, that I guess is the fear here, is that when and if those investments become options in your 401k, it may drag performance, it may cause liquidity issues to the investor. And, I think it is important to also think who is passing these rules and trying to get this, get this into your plan. You got to think what their motivation may be. I think for these managers, more retail money and more liquidity in their funds, that's obviously what they're going to want. They want more retail money into their investments. So it may not be in your best interest. It may be in the fund manager's best interest.
Yeah, and I mean, after hearing that about Joel's experience, I think it's safe to say that we won't really be recommending any types of alternative investments anytime soon.